Hello and welcome to another update video about MATIC. We have quite an interesting development now on this price chart because yesterday the price has shown one more high. Now that was quite a bit of a rally. I think it was related to some kind of Reddit news, something about I don't know. I haven't really followed it. I only did read it between the lines, and it doesn't matter what caused that spike. There was an additional high point and the rally occurred from our support zone. So that means officially, most recently we had one support zone that worked out, another 1, 2, 3, 4, 5, 6. That's pretty good. Nice for swing trades, and you see the power of Fibonacci at work. Yeah. Now, the problem is, or not the problem, but the situation is now that with the latest high, even though it has missed the $1.06 level pretty much, yeah, we can count 5 waves up from the January low. Now from here, that indicates a top could be in wave 1 now. So that means we might have completed a 5-wave cycle. However, you will remember that my ideal target here was basically $1.11, $1.12 to $1.15 and minimum $1.06. I mean, officially, minimum targets are obviously for a wave 5 to at least go above the 3rd wave high, which it did. But, you know, obviously we always lean with probabilities, and typically the chart would reach the next fib level. So it didn't do that. Therefore, and also because this was quite a shallow wave 5, I would prefer actually another 4-5 pattern. I have modified here the count to indicate in the orange scenario that one more high is possible, and I would prefer that. So the orange count is what I prefer: 1, 2, 3. This would be then a 4 and a 5. Actually, that third should sit here. So that's what I would prefer. And then after these 5 waves are complete, we should see a wave 2 pullback, because that would be wave 1. And then we should see that wave 2 pullback occur. However, because of yesterday's high, it is now formally possible to already count 5 waves up to yesterday's high, which is why I've added already a wave 2 support zone that is defined between 75.7 and 89.7 cents. Okay, we also have the additional support levels here of 81.2 and 85.4 cents. This would be an area that could be an opportunity area, another one in addition to all these that we already had, if we now get a pullback into this zone. Now, very important, my preference would be one more high, which means ideally from this wave 4 support zone, which is now defined between 89.6 and 97.6 cents, one more high to ideally, yeah, $1.12 to $1.15. That would be ideal. It would look, you know, we're always looking for ideal structures, right? And that would be the ideal structure. As I said, it's just due to yesterday's high. I can, if I really want to, count the 5 waves. So I think you should know that, which means I'm primarily watching for here micro support to hold now and one more high. But in case it breaks, we already have a backup plan, and then we can watch this area for a potential reaction. Now, if we're already in wave 2, then the next rally should be a 3rd wave, and that's typically the most aggressive rally in an uptrend. Yeah. And overall, don't forget that we should already be, if this assumption is correct, we should have completed a larger degree wave 2 in January, which means we should be in a larger degree 3rd wave that could take us minimally to $2.12 and ideally $2.41 plus. This is just basically the beginning of the microstructure of that yellow 3rd wave, and we're just discussing and exploring if we get one more local high here to form wave 1 of the larger 3rd wave, or if it's already complete that 5-wave cycle. But certainly the probability of alternative wave 2, that we haven't finished the wave 2 on the 23rd of January, that has reduced in probability because of the 5th wave to the upside. So 2 bullish scenarios here. That's pretty good. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.